Hey everybody, this is Valerie Saunders. Welcome to another episode of Val's Vibe. Sorry I haven't been doing these as regularly as I normally do. I have been traveling quite a bit. I had the good fortune of going to a real estate conference in Spain in May, and also just got back from EPM Tag, which is an amazing event last week in Atlanta. But today I wanted to look at a hot topic that has been quite a lot of conversation in the mortgage world, and that is the potential privatization of Fannie Mae and Freddie Mac. So let's break it down. Fannie and Freddie are government-sponsored enterprises. Their main role is to keep the mortgage market liquid, basically buy loans from lenders so banks can lend more. Since 2008, they've been under government conservatorship, meaning Uncle Sam's been in control following the mortgage meltdown. But let's fast forward to now. President Donald Trump and FHFA Director Bill Pulte have reignited talks of privatizing both entities. Now, you may be wondering, why do I care? Well, privatization could impact interest rates, mortgage accessibility, and quite honestly, who gets to own a home. Just looking at some numbers, as of Q1 2025, Fannie Mae and Freddie Mac guaranteed over 60% of all U.S. mortgages. That totaled more than $7.5 trillion in assets. A Congressional Budget Office report estimated that full privatization could actually increase average mortgage rates by 20 to 30 basis points. So if we use that on a $300,000 mortgage, you're looking at about $40 to $60 more per month times 360 months if it's a 30-year loan. That's a lot of money. So let's look at a timeline. All the way back in 2019, during his first administration, President Trump laid out a blueprint for reform, but those efforts really stalled. Now we fast forward to today, June 2025. Housing policy insiders are suggesting that a new plan could possibly be launched during Trump's administration, but it would still require congressional approval, and that's going to be a steep hill to climb, especially with bipartisan skepticism. On just Friday, June 6th, U.S. Senators Elizabeth Warren, ranking member of Senate Banking and Housing and Urban Affairs Committee, and also Minority Leader Senator Chuck Schumer, led more than a dozen Democratic senators in a letter to FHFA's Director Bill Pulte, raising concerns about the Trump administration's recent discussions about reprivatizing Fannie Mae and Freddie Mac. The letter quotes, "Given the seismic changes this decision represents and the concerns it raises about the stability of our nation's housing and financial markets, we write to ask that FHFA pause efforts to reprivatize or otherwise alter the enterprises, including relisting their common and preferred stock." They went on to state, "Economists have warned that reprivatizing the enterprises could have disastrous effects on the mortgage market, driving up costs for homebuyers even further. For example, some experts have estimated that mortgage rates could increase by up to 1% in the first year of privatization alone." The lawmakers also pressed Director Pulte for details on the administration's plans. It has also been reported that the administration may consider relisting the enterprises on a stock exchange. However, the administration has also not released any information indicating whether the enterprises' financial positions would make it feasible to take them public, including by relisting their common and preferred stock, or what taking them public would entail. As part of the letter, the senators also requested answers to their questions by June 18, 2025, followed by a briefing to discuss the responses. So with all of this conversation, I would say we're likely looking at 2026 or even 2027 before any real substantial moves happen. And that's assuming everything goes according to plan. Experts are split, however. Some say privatization could bring innovation and market efficiency, helping non-bank lenders helping non-bank lenders compete. Others warn it might increase risk, reduce loan availability in underserved communities, and further widen the homeownership gap. In addition, the Urban Institute predicts that without strong regulatory oversight, privatization could cut access to credit by up to 15% for minority and low income borrowers. And that's a lot to just lose for potential homeownership. So what do we do? This move is really going to change the landscape if it does happen, but it's not guaranteed to benefit everyday borrowers, especially those first-time home buyers. So what's my advice? Basically, stay informed and connected with the National Association of Mortgage Brokers, NAMB. You can visit our website at namb.org and click on advocacy, or you can visit us and stay connected through our social sites. And of course, we're always in the news. And most of all, really just advocate for transparency in any housing reform. Because really, at the end of the day, homeownership is power, and we need systems that empower everyone, not just the well-connected. So that's it for this week's episode of Val's Vibe. Hopefully you learned something, or if you have questions, please feel free to hit me up on social or shoot me a message at my personal email address, which is valsaun, VALSAUN @gmail.com. And of course, if you're enjoying this episode, please don't forget to share it with a friend. I'll catch you next time. And as always, I hope everyone has an amazing rest of their day and week. Have a good one.